Hey, it's Mack with PriceActionTradingSystem.com. And today is Tuesday. It's August 19th. This will be our chart lesson for today. A really interesting day. It started out much like yesterday, except we've continued to go higher. You can see the EMA is pointing straight up. Um, it was a little bit easier to find. This looks, notice the spike in the channel. We didn't have the gap, but we had the spike up and we went in the channel. It's almost a repeat pattern from yesterday. Only thing is we've continued to go higher up until, into the 2 o'clock hour today, even though it's been slow and methodical. But let me show you something. Notice these flat lines. What would happen is we would really just kind of be stuck in a range, and then they would break it lower and they would trap everybody to the short side. And notice how each time they did that, that's where your move came from. And you can see this pattern happened first here, happened again here, although it's not quite as obvious. Uh, but most of your touches came right across here, as you can see, and we had that little break lower, and then we went higher. I actually moved it down. I think it fits a little better right there, and that really fits off the highs over here as well. But it's a repeat pattern. It's not, this one's not quite as obvious, but once you saw those two, and then look, it happens again, and then look, it happens again. Although this one, um, you didn't get as much of a correction, but I think most people saw it as going higher. And we were finally, not getting below the EMA. It looked like it was going to take off here, but that's a first entry, and if you waited on the second entry, it didn't come till here. Notice the new high, first entry, pull back. There's a second entry, but you had to go long right at the high there. This one was really pushing it, but this one was, a lot riskier. I felt like we were going to go higher, but I felt like that before, and I'm wrong. So you got to follow the rules unless you want to be a little aggressive. And even if you were aggressive with this one, it never really backed up on you unless you used a stop entry, which I would have waited on it to break above here and use a limit order. And you see it came back. You could have gotten filled a tick, maybe two, just depending. And then it never backed up after that. So it never, you can get in with a small stop. So that's the only difference I will say about that one. Really, all of these you could get in with a relatively small stop. So they were low risk trades that if you're wrong, you're not going to lose but a few ticks. Uh, but the, you hopefully study this. But look where each big move originated from. If you just wait on that little trap, every time that's where the move originated from. Otherwise, it would just hung up in a small one to 1.5 point increments, and it couldn't do anything. And then they trap everybody, and that's what's happened. Somebody, actually, a guy sent me his chart, and I'll read his email first. I think I saved it. Let me read his email here. It says, "Hey Mac, I took 8 trades in total today, lost on 2, won on 6, came out with a net profit of 2.2 points. Please find a copy of my chart. I'm slowly getting better. Feel free to share it if you like. In regards," and he left his name. I won't give his name. But here's his chart. And you can see the only 2 trades he lost on, he counter trend traded. Where did he go short? He went short right here and got stopped out, I believe. And he got stopped out. I think he went short right here and got stopped out. And if he hadn't a counter trend traded, he'd have been 6 for 6. But instead, he was, let me just double check that to make sure I'm right, because I don't want to mistell you something. So, yeah, he went short right here, got a loss. I believe that's right. Actually, no, I take that back. I think he went long right here, and then he took his stop right here. So, and his other one of these was a counter trend trade, I believe. I thought they both were counter trend trades, but now I'm not so sure. Looks like he went long and got stopped out right there. Then he went long, exited there. I guess that was his runners. Or no, he went short there and got stopped out there. So yeah, there's his other one right there. So, um, That was his short right there that he got stopped out on. He saw the trap here. He noticed he saw every one of the traps, but it looks like if he'd have just followed the rules, he'd only had one loser instead of two losers. So if I'm reading that right, I hope I am. So, but but that's great. He's hadn't been with us very long, but he's every time he sends me his chart, he sees the channels, he sees the setups, so he's got them down pretty good. So now he just got to learn to be very very strict with the rules. Don't break the rules. Don't counter trend. If you tried to counter trend trade today, you got burned every time. I don't think any of these worked. I believe you would have got burned on every one of them. And that's why we don't counter trend trade. They'll work sometimes, but they'll work just enough to keep you trying to do what we do. So let's talk about the trades, and there's one other little small thing I want to share with you, and then we'll be done for the day. But here's the first trade I saw. You had a channel working down. I wasn't sure if it was off this swing or if it was off these closes, but generally when you get that many closes going down, that's going to be your trend. You got to break a new low, but even if you do it this way, you got to break, and it tried to go lower twice. I don't see how you want to go short right there. It looks like a big reversal type bearish bar, but notice that you're just kind of hung up across there. This was a big move up. You're probably going to get at least a second leg, so they're trying to trap people. But it turns out that it just is a trap and it goes straight up. So by not going short into that EMA and being patient, you get an easy trade right there. And then it pulls back and you get a second entry here. This is where you had a loser. Notice on my chart, it's not a very good setup. Notice your signal bars right here. And when this one couldn't go higher, especially after these little choppy looking bars that, this, you got 1, 2, 3, 4, basically you got 5, 6, maybe even 7 or 8 bars stacked up there. They're not completely side by side, but there's a lot of dojis. That's risky going long right there. The only way I would recommend going long there is waiting on it to break higher and then backing up and getting in with a limit order. And you had to get in this one, I think, at least a tick back. And I don't think you would have gotten filled. You wouldn't have on my chart. And then it tries to go higher and then it's moving down. And notice you got one leg up and then a second leg up. So on a bigger pattern, you've got two legs. They weren't quite measured, but this is just not a very good setup. So I think it was better to wait and kind of see what happens. And again, you don't want to go long or short, especially when it continues to get hung up here. Wait on the trap. And notice it comes right here. It breaks lower, it turns and reverses, and you can go long right there. And if you drew this first line up here, and you drag it down, it fits right here. And so you should have been looking, thinking there's a possibility if I draw this line up here off these highs, there's a possibility, and I drag it down here, that it might bounce here. And notice that's a 45-degree angle, so that's a good angle to be looking for down here. And so that would have been something that might have led you to look for that bounce right there anyway, but you don't need that. Even if you don't have that, look at that double bottom, that little failed break lower, chance to go long. Nice setup right there, nice trade. And guess what? That trap is what takes the prices up. Everybody got trapped, so they're all exiting, and the smart traders were waiting on the trap, and as it goes higher, they all have to exit. And then it runs out of steam, and it gets right back into another little trading range, just similar to this one. And notice, there's a pullback. That's a first entry. You make a new high, so it pulls back again. So that's still a first entry. And then it pulls back, and it makes that little trap and gives you a second. That's a nice two-legged pullback. So another second entry long right off the EMA. You got a little bit of what looks like a trap there. Notice how it was closing down here, and it can't close any lower. So you're getting stronger there, and it reverses. And that's a failed, notice that low right there, first entry short, second entry, it's a failed second entry short, all the things you want to see to go long, and you get another surge up. There's a little breakout pullback long right there, but I think that's too risky with all those highs there. And then guess what? You get another two-legged correction, you get another little trading range, you get that little trap that breaks lower. Just go along right there, and off it goes again. Again, this is one you might use a limit order, and you could have gotten filled Uh, I believe you got filled. I know you got filled at the high, maybe a tick back in, and then it takes off again. So you could have used a limit order here to make sure you get enough room to get out. You didn't really need it there. And I was looking for prices to go. I really thought they'd probably go on up to the high, but they got hung up again. They ran out of steam pretty quick, and then you get another little trap. But this one, you just don't have any room to play around here. Again, you had this inside bar that is a pretty bearish bar. This would be more your signal bar, but this is the one that made the swing low, so you got to use that for your stop. But notice how it broke higher and pulled back. So you could have got filled a tick or so back into that one, not very far. This is one you just have to, go with the odds that we're going higher. And this thing turned down right off those highs, and we're kind of hung up in another little trading range again. Notice that this one's way away from the EMA, though, so it'll probably have to work its way back to the EMA. And notice each time that it had worked its way back to the EMA on that second entry. And if you look at this bigger picture, this is still a two-legged pullback. Notice this. There's two legs here. That's your first leg, then a correction, and then two legs back for your second leg. So even this is a two-legged pullback that pulled back to your trend line, actually created your trend line. And no, we haven't come back and tested that again. And really what was happening is this thing was so weak. Prices were just dancing on back and forth on both sides of that midline. And now we found resistance up here at the upper line again, right where you would expect it to happen. So I feel pretty good about that channel. I got some others that were close, drawn similar to this, but they just didn't fit real well. I believe that to be the channel. Until I see something different, I'm going to stay with that one. But you didn't really need it. All you had to do was use the EMA, even if you couldn't find the channel. That EMA is just like a trend line almost. So just keep that in mind. But there were easily 1, 2, 3, 4 nice trades, and every one of them moved pretty quickly. Might have got a runner off most of them. That would have been good for a couple of points. And depending on if you caught a runner here, you could still be riding it. I don't like to do that. I usually don't stay with them. Once we went into this, I probably would have exited. I probably would have exited when we broke higher there and couldn't go any higher, and then look for another entry, and then you get a new entry and you do the same thing again. That's the way I like to do it. But if you like to swing trade, use our strategy to get into a swing trade, and even if you're wrong, you don't lose much money, and hopefully even if you're wrong, you still get a few scalps out of it, so you still make some money. That's what led me to this strategy was taking a trade and watching it go 4, 5, 6 points in my favor and then back up and take it all back, stop me out, and then go right back where it was going to go again. And I got tired of that. I got tired of watching myself almost every trade have a little money in my piggy bank, so to speak, only to watch it take it back again. So I started testing. I said, well, I'm just going to start taking my profit. And then I started reading more, and I found out that there's a lot of professional traders that just scalp for 4 ticks, and that's a common move. And then I got to looking at how many times prices go just enough to get 4 ticks before something changes and backs up. So remember that. All our trades are designed to do for sure is get 4 ticks. Past that, and it's amazing how many times you will see one of our trades trigger and it moved just enough to get your scalp, and then it reverses and goes the other way, or it reverses and backs up and goes way down before it goes up again, or way up before it goes down again, whatever. So, but if you just stuck to second entries today, except for this very first trade around around 7 this morning, other than that trade, all of these are second entries. And notice this made a new high that's higher than that one. So there's pullback, first entry, pullback. So even that's a second entry. This was a second entry. It's not you don't have a real good setup bar there because this one is more bearish than it is bullish. Notice the rest of them all have a little bit of a green tint except for this one right here. And even then, before it triggered, it did have a bullish tint to it. So that's your differences in those. And now we're setting up kind of the same thing. We're kind of going sideways again. And will we go sideways all the way over and get it and make another repeat pattern? I don't know, but there's probably a good chance of that. So we'll see what prices do. But follow prices, You couldn't really draw your short-term trend lines on these because they're not really trends. Just draw your flat lines, and you could have put the highs on it if you wanted, but you don't really need that because the trend is up. So you're looking for the traps to the downside. You're not going to take the traps to the upside because look, you would have got burned there. You got a second entry there, you still would have got burned, and then you had what looked like even another move there, and you would have got burned on all of them. Same thing here. Same thing here. This one might have gotten a scalp. Let's just, if you entered this one, your trigger would have been 74 and a quarter. No, even it was a 4-tick failure. So none of these would have worked. They would have all been traps. And that's why we don't counter trend trade, because this will happen to you more times than not. And this is one of those days where it doesn't look like it. It's real choppy and the bars are all little dojis and small, but they just keep going higher and higher. Look at the AMA. It's getting steeper and steeper all the way up. That's a good trend. And I've seen trends like this go on all day and go for 20 or 30 points. And the whole time they look like they're going to reverse. And I know every time somebody takes a short like this, they're just setting up for a failure. And I'm going to capitalize on it. And so follow the rules. And remember, we don't counter trend trade. And this is a good day, a good example of why. One other thing I wanted to share with you. Gentleman, he sends me a lot of stuff. I've shown his performance before and stuff, and we were talking about we talk about psychology and the mental aspects of this, and you'll hear me talk about that a lot too. Is that there's a lot of psychological importance. A lot of what we do is mental. In other words, is what I'm trying to say. And so you have to be mentally of the right frame of mind. And if you don't believe you can do this, you will never do it. And if you don't believe it can be done, you will never do it. So you got to, first of all, you got to believe in yourself, and you got to believe in the strategy, and you have to study and put in the time, and it's hard work. And but he sent me this. I'm gonna read it to you. It says, "A man or woman's ego is almost always their most," and he's got most is, you know, emphasized there, most prized possession. Let me read that again. A man's or woman's ego is almost always their most prized possession. And he goes on to say, and he got this from, I think he talks a lot to like a coach, a motivational coach, a mental coach, somebody that helps him with the mental part of this. And some people might need that, because if you don't have the intestinal fortitude, you'll hear me say that a lot, if you don't have the intestinal fortitude to stick to the rules and do what you're supposed to do, this is going to be hard to break into. It's going to be hard for you to be successful. So, but anyway, back to this. A man or woman's ego is almost always their most prized possession. This is why people fail in this business. They can't take being wrong. Let me read that one again. One of the reasons people fail in this business is because they cannot accept the fact that they're wrong. They're smart, they're always right, they've always been right, they're smarter than everybody else, so usually they're right, but in trading it doesn't work that way. This is why fund managers and even more experienced traders will not believe you when you talk about your success. The reason being, because if they did believe you, they would be proven wrong themselves, because they are not having that same success. I'll read that one again. This is why fund managers and even more experienced traders will not believe you when you talk about having extended success. And the reason being is because if they did believe you, it would mean they were proven wrong, and they would have to admit they're wrong. And again, a man or woman's ego is almost always their most prized possession. They can't take being wrong. So it goes on to say only the very top level of peak performers, and this is in anything. This is not just trading. This could be anything, sports related, you know, IQ related, anything. Only the very top level of peak performers are those who do not accept limits. They're people that can kick their egos to the curb and accept. They're the kind of people that will accept brilliant breakthroughs. Let me just read it the way he's worded it. He worded it a little bit differently than that. Only the very top level of peak performers, those of which do not accept limits, those who kick their egos to the curb, will accept brilliant breakthroughs. So in other words, in order to make a breakthrough or in order to be successful at something, you have to put your limits out of your mind. You have to assume there are no limits. So if your limit is to make $100 a day and you believe that's possible, you'll probably come in here and make $100 a day. But when you try to go to 500, that's getting a little steeper. And if you believe you can make $500 a day, you will eventually make $500 a day. It'll take you a little longer, but you'll eventually get there. But if suddenly you think, well, $1,000 a day is not possible, then you're never probably going to reach that goal. But once you can do this with one contract and you can make money every day, you can do it with 100 or 1,000 the when you have the funds to have that kind of margin. But I will say this, and make sure you hear this, so make sure you understand what I'm saying. Every time you increase your leverage here, you will mess with your mental targets, your mental thinking, your mental aspects. So it's much easier to go from one contract to two or three than it is to go from one to five. And it's much easier to go from two or three contracts to five contracts than it is to go from one to five. And it's much easier to go from two or three to five and then on to seven or eight than it is to go from two or three to 10. Because every time you increase your leverage, you put a little more doubt in your head. As you see, when you got one contract and it ticks against you one tick, that's $12.50 or 12 and a quarter. What is it? I forget. Uh, it's 12.50. Every time it ticks against you or for you with one contract, it's $12.50 that you're losing when it goes against you. But let's say you got 10 contracts, so you multiply 10 contracts times 12.50, and that's a big chunk of change. And the bigger you get, the more contracts you have. But let's just say it's 10 contracts. Well, every tick that goes against you, you're losing $125. So if you're wrong and you start to see it race against you two or three ticks, you're quickly down a bunch of money, and it makes you think, I can't afford to be wrong. I don't want to have a big loss here. And the next thing you know, you've exited just before it rockets off. So I hope that makes sense to you, that as you increase your leverage, you increase the stress, and it's a little bit harder. At least that was my experience. I can't speak for everybody. Maybe that won't happen for you, but I'll be shocked if it doesn't, because everything that I've read about trading, as I've experienced it, I've found it to be true. Let me repeat that. Everything I've read about trading that I believe now to be true, I've found to be, actually true. There are a lot of things that, it's considered the gospel in trading that I think is 100% wrong. And you'll never get that until you can trade profitably and you start to understand price action and you start to understand what's going on. There are so many things that are considered the gospel that you read in every trading book, you read, you hear on every trading forum and every trading site, and some of it's just pure bunk. And I've learned that the hard way. And so I'm not going to say everything you hear is wrong, but just be careful what you hear and don't believe everything that's considered to be gospel is actually the truth. You've got to have your own frame of mind. So I'm going to read this one more time real quickly, and then I'm going to wrap up today. A man or woman's ego is almost always their most prized possession. This is why people fail in this business. They cannot take being wrong. This is why fund managers and people that are more experienced as traders will not believe you when you talk about your real success. Because if they did believe you, they would be proven wrong. And this stems from most of your funds are happy if they can make 1 or 2% a month. And if they can do 1 or 2% a month, they're doing extremely well in relation to most funds. But they trade totally different than we do. And we've proven that you can do 1 or 2% a day. And you'd be surprised at how many professional traders will say that's not possible. And they're wrong. They're just simply wrong. And I don't know what else to say about that, because I know people that do it. So I know people have proved them wrong. That just shows you that even professional fund managers are not always very versed in understanding price action. What they're good at is they got very deep pockets and they can move the market and they can ride out the lulls, and they're trend traders really, and they find the trend, they get on with it, and they can ride out the ups and downs and they ride it forward whichever way the trend's going. We don't do that. So we don't have to take those big drawdowns, and we don't have to exit, and answer to somebody else at the end of the quarter. We're only interested about the next 5 or 10 minutes in most cases. That's it. That's as far as we're looking ahead in most cases. So it's very different what we do. But anyway, this is why fund managers, more experienced traders, will not believe you about your success, because if they did, they would be proven wrong, and that would basically interrupt or prove to them they'd have to give up their most prized possession, in other words, of always being right. And only the very top level of peak performers, those who do not accept limits, make sure you get that, the ones that do not accept limits, and those who will kick their egos to the curb, those are the ones that can accept brilliant breakthroughs, and those are the ones that have success, because they never take no for an answer. Basically, is what that's saying. I mean, you don't have to be a rocket scientist to get that, but I'll explain that just in case there's some of you that English is maybe not your first language, because I know there are a lot of you out there. But basically, these few sentences are telling you that the way to success in this business is by believing, first of all, that it can be done, and then secondly, never accepting limits or believing that. I mean, just think about it. When the first guy ran the 100-yard dash and he had the best time, people probably believe, well, that'll never be beat. Well, every year somebody beats a new time, and people continue to get faster. People continue to get stronger. Why is that? Of course, some of it's because of new breakthroughs in eating habits and workout habits, and from learning. But that's the same thing in trading. We continue to study price action and we learn new things about it. We get better at it. But if you accept the limit that you can only make 2 points a day, well, then guess what? You're only going to make 2 points a day, because mentally you're not going to be able to handle anything more than that. And if you accept the limits that you can't make money at all at this, you're never going to make any money at this, because you've limited your belief system. So anyway, I didn't mean to get 20 minutes into this. It's kind of stretched out, but I just think that's real important. We probably don't talk about the mental aspects of trading enough. Um, so I'm going to try to talk about it more. But anyway, I'm going to wrap it up for today. Not a lot of trades today. Again, the volatility is very low, but there's a lot of easy trades that were easy to spot, that fit our rules, that were second entry longs with the trend, with the trap, and everything going in one direction. So it was much easier today. At least it felt that way to me. Um, there were times when I wanted to give up, but once you saw this happen a couple of times here, and it wouldn't surprise if we don't get another one up here before it's over. So we'll see. We have touched the upper side, so it's a good chance we may get all the way back down to the bottom again. But notice this today. Notice how long it took to get to the high, but notice we never came back to the lows until we got there. And we still hadn't come back to the lows, but it looks like we're trying to work there. But notice here, we came from the high to the low. We went from the low to the high. We went from the high to the low. And it doesn't always go straight down. Because the trend was up and the buying pressure was up, it kind of had to go sideways almost to get there. And then it's been going up ever since, and now it's reached the upper side. So the odds are we're probably going to work our way back down to the low side. I still would be very careful about counter trend trading, but if you were going to ever counter trend trade, this would be when you would think about doing it. But don't think about doing it, because we could just keep working higher and stay in this upper half of this channel now. The upper tier of this two-tiered channel here with a midline. So we could stay there. We may not get back down here today. It may be tomorrow. We could just start falling off the page and come right down here and get a break, and that's it for today. So, but just remember, the odds tell you that it's going to go from one side of the channel to the other, and you can see that happening. And notice how this just kept going higher until we finally got there, and now it's trying to correct again. So keep that in mind. But I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.